You've heard that this thing called a Roth conversion might be able to significantly reduce your taxes in retirement, but you have no idea, well, how do I actually go about figuring out if it makes sense for me? In this video, I'm going to show you the simple 3-step process I use to help my clients as a financial advisor determine if Roth conversions are right for them. And this is really important because Roth conversions done correctly can save you a boatload of taxes in retirement. Roth conversions done incorrectly can actually worsen your tax situation, kind of increase your lifetime tax burden. Okay, so first step here is estimating your future tax rates. And the way we do this is we create a lifetime income projection. Biggest mistakes I see folks make here is they try and do it themselves, create an Excel spreadsheet. One little mistake and it blows up the whole projection, makes it just wildly inaccurate. So I always recommend use software for this. And two, just know that the model is really sensitive to the inputs and assumptions you use. So think long and hard about your assumptions, be reasonable with them. So that's the first step, creating that lifetime income projection and getting your estimated future tax rates. Because once you have your income projection for each year, then you know, okay, this is what I estimate what tax rates I'm going to be facing in retirement. The second step is determining your current tax rates. Best way to do this is essentially creating a pro forma tax return. So close to the end of the year, say, hey, these are what all my income sources are going to be, plug it in, and then say, okay, now if I add a Roth conversion on top of that, how's the Roth conversion taxed? And this is really key because the sticker price of taxes, hey, this is the tax bracket I'm in, that's the tax rate I'm facing, is usually wrong because the tax code is complicated. There's so much in there. And so I often see folks like, hey, I'm in the 24% federal income tax bracket. I'm going to pay 24% my Roth conversion. Then we actually do the analysis. It's like, it's actually kind of closer to 30% because we forgot about the net investment income tax and IRMA. And when we add all that up to the Roth conversion, it's like, shoot, it's 24% plus these other stealth taxes, I like to call them. And so our effective tax or marginal tax rate is the technical term, is actually higher than the standard advertised, tax rate of 24%. So second step, determine your current tax rates with that pro forma tax return. Step 3, you compare them. You compare the two. So if you think your tax rates are going to increase in the future, meaning you think your current tax rates are lower today than they're going to be in the future, then generally a Roth conversion makes sense. That's the rule of thumb. But if you run this analysis and you say, hey, actually, I think my IRA income is going to be taxed at lower rates in the future. I think my tax rates are going to be lower in the future. My tax rates I'm estimating are higher today than the future. Then generally, we don't want to do a Roth conversion. A lot of folks will use simple online calculators that don't really do this. And the calculators just measure some tax savings. And there's a lot of problems with that method. Usually it's people being too aggressive with their Roth conversion. They convert too much money into Roths and it actually ends up harming them. So hopefully with this process, it can help a lot of people avoid that. Hope this is helpful. If you're serious about creating tax efficient income in retirement and you feel like you want some expert guidance on it, I would be thrilled to help you out. If you look in the description below, there is a link for a complimentary call for me where we can talk about your situation and see I might be able to help you out. Disclaimer time, this is educational information, not intended as specific tax, legal, or investment advice. Always talk with your investment, tax, or legal professional before taking any action on your situation. Happy retiring, guys.